Guys, you need to understand a few things. Number one, trend. The long term trend is still bullish. There is no change in the trend. Whatever downward movement you are seeing here, this is just a normal reversal, a retrace, and nothing else. And the weakness you are seeing here, this was because of the market was heavily saturated and heavily overbought. Now number two is weakness. If you think that this weakness was up to this level, no, it was not. There will be more weakness, and the S&P 500, Dow Jones, Nasdaq, if they manage to sustain around here, in that case the weakness will not come, rather it will simply reverse. Yesterday, by giving a bullish closing, the market has cleared its intentions that it can come down further. Why it is important? The reason was that the S&P 500, the S&P 500 as well as Nasdaq, both of these indices, they hit the saturation in the bearish side. And this was my final update on Thursday. And I mentioned clearly that closing of the S&P 500 today below 4705 will bring the K channel of the SRSI on the daily chart very near, close to, or it may be 0.00, and in that case the S&P 500 might not wait for a particular open tomorrow, rather it can give a bullish reversal tomorrow. So what we have seen, that because of this closing, it was at the saturation, and that is why the next day we have seen that immediately upon open it moved up heavily in the first hour, and it failed at the zone, which is why it was destined to come down. Now it came down, but at the time of closing it gave a closing that held the S&P 500, Dow Jones and Nasdaq to form a green candle. What? A green candle. Now this green candle clearly mentions or clearly indicates that the saturation which was there is not anymore in the picture. This means that now the bearish side is further, it is wide open. Now comes the point number 3, confusion. So what the confusion is all about? The confusion is that yesterday the non-farm payroll data, it was published and it was much better than expected. This heavy rally that you are seeing here, around 600 points, 600 or 700 points in S&P 500 in just two months, very heavy, extremely heavy rally. This rally was based on the speculation that the Feds will go for the first rate cut in March 2024. But because now the non-farm payroll data is stronger than expected, Feds have indicated that they can go for the first rate cut in June 2024. However, some economists are saying that after the strong non-farm payroll data, the Feds might consider Q3, not June 2024 but Q3. This is against the expectations of the stock market and the speculation that was there. That is why there is a lot of confusion, and now the stock market is simply correcting itself and is trying to come down to the levels where it was supposed to be under these circumstances. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these are daily updates, the daily analysis of the S&P 500 from Monday through Friday, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis, which will be applicable from January 8th, that is Monday, through January 12th, that will be Friday. So Monday through Friday, whatever is going to happen, I am going to cover here. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. Until last week, there was very heavy, extremely heavy saturation, not seen in last 16 years. But this week, because of this a small decline, we have seen that the indices have cooled down a little. So I will show you the weekly chart of S&P 500 as well as Dow Jones. And on the weekly charts, I will show you that what is happening to the saturation, right? Number 2, correction or recession in the year 2024. Correction is the best case scenario, okay, or we call it as soft landing. Correction means soft landing. Correction means 20% to 25% decline in the stock market. That is the best case scenario, the soft landing. Recession, as of now, there is still discussion or a lot of discussions on recession, whether the recession may happen or not. Okay, so I will consider many aspects, and I will show you through the charts what we are anticipating. If the correction happens, then to what levels the S&P 500 and the Nasdaq and the Dow Jones will decline. If the recession happens, then what will happen in terms of the percentage, to what levels the S&P 500 can come down and the Nasdaq and all. And other than that, how long this the recession and the corrections will be there, right? Point number 3 of the agenda is the S&P 500 technical analysis on the daily chart. So on the daily chart, we are seeing that now the trend has changed from bullish to neutral. It is not bearish. It is from bullish to neutral only. Okay. Now the trend will change from neutral to bearish. Okay, only if the S&P 500 gives up like 3, 4, or 5%. Okay, or more than that. So then only the trend will change. So I will show you that on the daily chart, that how that can happen or what will the conditions for the same. The last point of the agenda is the probable movement of the stock market, the entire stock market, through the S&P 500 from January 8th, which is Monday, through January 12th, that will be Friday. So just like last week, I mentioned a few things. For example, that this week, the recent week that has happened, okay, it will be a red week. Okay, we will see red color candles, and the weekly candle will be a red color candle. Okay, and other than that, any downward movement will be limited to 4698. Only if the S&P 500 is able to breach 4698, there will be more weakness. But again and again, the S&P 500 can try to sustain at 4698. In the bull side, the max it can go will be 4818. Otherwise, it will remain in between these two levels. And there were these the zones. If the S&P 500 gives up this zone, in that case, the next it will be looking for this zone, or we can say 452737. And this is a very strong support zone. It will be able to handle the fall. Okay, so I will discuss all of these things in this, the last point of the agenda. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And in order to get the daily S&P 500 analysis and precise updates, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And this is the weekly chart, W as in weekly chart. Okay, weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay. Now on this, the weekly chart, the last candle, okay, it's a heavy bearish candle. Okay, there is no defined shape. The only thing is that it's a heavy bearish candle. This simply indicates that at the time of closing on Friday, there was the weakness. The weakness was there in the market. Okay, this weakness is expected to continue. However, this weakness does not confirm a gap down open, because the closing was well above the lowest price. The lowest price was 4682. Okay, whereas the closing was at 4697. Other than that, this candle says that there is weakness. This means that the S&P 500 can still come down. Okay, and when it comes down, it is expected to find support, okay, somewhere around these the levels. So that I will discuss later. As of now, I think the candle, the part is clear. Now when we look into the technicals, so what's the change in the technicals? The moving averages, Ichimoku, Bollinger Bands, all are bullish, no change. Okay, the MACD is still bullish. The stochastic RSI is a bit bearish. However, the stochastic RSI is still trading in the bullish zone. So we can say that overall the S&P 500 is still 100% or 95% or more than 95% bullish on the weekly chart. Okay, other than that, the saturation and overbought, okay, it was there, but now because of this the bearish candle, it is not there anymore. Okay, now this is the chart of Dow Jones. Okay, in the Dow Jones, the picture is much more clear. Everything is bullish, everything is clearly bullish. Okay, even the stochastic RSI is bullish, so we will say that Dow Jones is 100% bullish. The only thing is that the Dow Jones is still in the overbought and saturated condition. Earlier it was heavily overbought and heavily saturated, but now it's simply overbought and simply saturated. This means that there is still more room in case of the Dow Jones, okay, to come down, right? So this picture was not much clear in case of the S&P 500, but through Dow Jones, okay, it is now very much clear. Now this means that technically, okay, if we apply the Fibonacci retracement here, so that is the best thing whenever you are looking for that, like to how much the an index or a stock can retrace. Okay, so when you apply the Fibonacci retracement, then you will see, okay, 4630 is the number, 4630. This means that whatever weakness we are seeing here, okay, or in case of the Dow Jones, okay, then it says that if the weakness continues, if the S&P 500, Dow Jones, if they fail to sustain at their current levels, it looks like that they might fail to sustain at the current levels, then 4630 is what we are looking for. Okay, and if it gives up 4630, in that case the next will be the golden support, that will be 452737. Okay, or if it gives up 4630, then this will be the early indication of the trend change, that the trend is going to change from bullish to bearish. So neutral, currently the S&P 500 on the daily chart is in the neutral trend, then it will change from neutral to bearish. And whatever is happening or whatever is going to happen, I will keep you posted through these precise updates on the daily basis to my Patreon community members. So if you have not yet joined my Patreon community, you can join my Patreon community. And if you have not yet subscribed to my YouTube channel, then you can subscribe to my YouTube channel. And guys, as you have seen the power of technicals, that through the technicals we can predict the movement, what is going to happen, what will happen, especially, okay, like this movement, this was there, then an open, cancelled the condition, moved up, closed, saturated, and then next day a bullish movement, okay, like this. So if you also want to learn the technicals, the technical movement, the hacks, the predictions, if you want to predict the movement even before it happens, and my calculated support and resistance levels and much more, then you can participate in my stock market knowledge transfer program. I've given the link to this program in the description of the video and also in the comment section. All of the details are mentioned on this page, and this is the Google spreadsheet, and this is my email address. And when you open this, the Google spreadsheet, then you will see that then you will see the content of the program. So I cover each and everything, and I share the technicals, all of the technicals, okay, and the trading strategies and the options, live options trading, live options, okay, calculations, strategies, and the predictions, how to predict the movement of the market even before it happens, okay, with the accuracy, and manipulation, okay, traps, and intraday hacks, short term, long term hacks, okay, with 99% accuracy. Okay, so these are the terms and conditions, okay, very simple. And these are the snapshots of the participants who have recently participated in this the program. So whenever you want to participate in this the program to become self-reliant, so this is my email address, you can simply drop me an email, or if you have any questions that you want to ask, then also you can simply drop me an email. Okay, this is my email address, and the link to this program is in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and the second point of the agenda is the correction or recession. Okay, so one thing that you must understand, that correction, everyone, okay, is agreed to the correction, and everyone is saying, so correction means soft landing. If you have heard of soft landing from the Feds, from all of the news channels, from all of these people, that they are talking about the soft landing. Soft landing means correction. Correction means 20% to 25% decline in the stock market. Okay, entire market, not just S&P 500, it will be applicable to everything. 20 to 25% decline. This 20 to 25% decline in the indices, okay, Nasdaq, S&P 500, Dow Jones. Whereas the individual stocks, okay, that decline may vary. Okay, so some stocks might give up, like 40%, 50%, 70%. Some might give up only 20%. So individual stocks, okay, it will depend. Okay, but the index means 20 to 25% decline. That is the best case scenario, the soft landing in 2024. Okay, now when we say this, the soft landing, okay, 20 to 25%, then what will that be in terms of the numbers? In terms of the numbers, okay, so from there the 20% decline will be 3700, and 25% decline will be 3,500. Okay, so this means that 3,700 to 3,500. Okay, this is the best case scenario for the year 2024. Okay, soft landing, this is the soft landing. Okay, now if the decline, let's say if it resumes its bullish trend, if it further moves up, then the 20% or 25% will be calculated from that level. In that case, then that decline may be like 3,900 to 3,700. So it will depend then that from what level the market is going to give up. Okay, and if you have watched my previous S&P 500 weekly technical analysis, okay, not just this the last one, but before that in the month of December, okay, then I mentioned that in case of the Dow Jones, okay, 37,600, approximately 37,600 plus minus 100 points or so. Okay, so that much leverage we can give. We are anticipating the high of the season. High of the season means this particular, okay, last few months, whatever. Okay, this will the high of the season, then it will decline for next few months, okay, or for next many months, and then only it will be able to make new high either in 2025 or in 2026. Okay, so you can see that again and again 37,600, and I've also cleared this thing, okay, strongly, that 37,600 will still remain in the picture. Doesn't matter whether the Dow Jones is giving up or if it is moving up, it will remain in the picture for some time. Okay, once the Dow Jones sustains properly below 37,600, then only this will be out of the picture. Or if somehow the Dow Jones is able to sustain above 37,600, will not go out of the picture, it will remain in the picture, because again and again Dow Jones will come down and will hit 37,600. Okay, anyways, here in this case 3,900. Okay, so for now from the current levels it is 3,700 to 3,500, and this is a soft landing. Why the soft landing? Why the soft landing is because of the strong labor market, strong labor market, and the same was confirmed yesterday when the non-farm payroll data, okay, it came better than expected or stronger than expected, the non-farm payroll data. Okay, it has increased the chances of the soft landing, means 20% to 25% decline means correction. Okay, so everyone has agreed to this point. Now yesterday when this the strong better than expected non-farm payroll data was published, then what we have noticed that this is the 2-year bond yield. Okay, so yesterday because of that data we have seen a very heavy confusion, and because of that confusion a doji candle has formed. What? A doji candle has formed. Doji candle means confusion, simple. You can see that these are good candles, okay, green red, but this particular last candle, if you notice, okay, up down and then closed around the open price. Okay, this means confusion means that the market was earlier anticipating that the first rate cut will be in March 2024 no matter what, and then in every meeting there will be the rate cuts. This was a scenario for the Great Recession. Okay, means first rate cut in March and then in every meeting, okay, more and more rate cuts. This was scenario for the Great Recession. However, because of this strong or stronger than expected data, now the market is thinking that the market has miscalculated, and because of that miscalculation the market, it moved up heavily. Not miscalculation, speculation. That was speculation that the Feds will go for the rate cuts in March and then subsequent rate cuts. So market moved up heavily, and now the market is trying to correct itself. Okay, because now the market is also convinced that the first rate cut will not happen in the month of March. Okay, it again the first rate cut is anticipated in June 2024, but now the economists they are saying that Q3. Okay, Q3 means that will be July, August, September. Okay, in Q3 we can anticipate the first rate cut. Okay, so this was the miscalculation or the speculation from the market. Okay, and now the market is simply trying to correct itself. So a correction scenario is, I think it is good. Okay, now you understand the soft landing. Why the soft landing? Because of the strong labor market. Okay, now let's talk about the recession. When we say recession means anywhere from 40 to 50% or even below. Okay, 40 to 50% or even below. So current level is 4700 or divided by 2. 50% means divided by 2. Okay, so this will be 2350. Okay, 50%. However, it may look that 2350 number. Okay, it is very very pessimistic. Okay, but this is stock market, anything can happen. Nobody was thinking of the 4700 levels, especially when it was 4100, but it happened, and that happened within 2 months. Okay, so now in order to show you that what can happen, let's look into the monthly charts. Okay, this is the monthly chart. Now in the monthly chart, okay, uh, this was in 2022, 3491. Okay, so 3491, we are anticipating the correction or the soft landing. Okay, this part is clear. This is the correction, the soft landing, best case scenario for the market. Recession means, if we look into the recession, okay, and if I show you the technicals, okay, then look where the 200-day or 200 month moving average is. 200-month moving average is approximately, sorry, it is approximately 2670, 2670. Okay, and it's been many months, years, not months but years, after 2008 2009 we have not seen a hit to the 200-month moving average. Whenever the recession happens, okay, just remember this point. Okay, I repeat, whenever the recession happens, the market or the index, it hit the 200-month moving average. Okay, this is very very simple logic. Even if you are a non-technical person, okay, just add this, the 200-month moving average, or just add this the moving average, okay, and change the value to 200 days. Okay, and then change the chart to month, and then you will come to know. So whenever the recession happens, then the market or the index, it hits the 200-month moving average. Most of the times it breaches the 200-month moving average. Okay, so this means that whenever the it comes down, in that case in March 2020, the low price of the candle was approximately 2200. Okay, in the month of March 2020. This means that after breaching the moving average, it can come down to 2200 something levels. And yes, this is what the numbers say. Closing is 4700. Okay, last Friday, divided by 2 means 50%. 2350. So the number is very very pessimistic. Okay, it doesn't look good, but again, this is the stock market. Okay, anything can happen, sudden movement, bullish or bearish. Okay, and again the same logic, that no one was thinking, or no one was anticipating that that by the end of 2023 the stock market will be able to hit 4700, or will be very close to 4800, especially when it came down to this level. Okay, this was all because of the open support from the Federal Reserve Chairman, and the speculation of the these are market manipulators. Okay, these were the two reasons why we have seen this the 700 points, okay, movement in just 2 months. So if the market can give 700 points movement in 2 months, then it can lose 700 points, okay, in 2 months, or maybe 1500 points in 6 months or so. Okay, so never ever trust the market. Okay, bullish, bearish. So just look into the numbers, look into the technicals, trust the technicals, as simple as that. Okay, and the market will come and hit the technicals or the technical levels. The recession, okay, see, as of now, the only condition that can trigger the recession, okay, there is the debt bubble, DEBT, debt bubble. Last week, the debt on the US, okay, it hit an all-time high of $34 trillion. Okay, and 2 months, 1 or 2 months, okay, I think in the month of November, October, November, the total debt was $33 trillion. When the debt hit $33 trillion, that time many economists was saying that the economy will not be able to hold, because the debt is means it is too heavy, and now it hit the $34 trillion. So in 2000, it was the dot com bubble. In 2008, 2009, it was the housing market bubble. In 2024, if the recession happens, then this will be the debt bubble. If the recession doesn't happen 2024, then 2025. Okay, we are anticipating something very pessimistic. Okay, and this has nothing to do with the stock market or these things. This has to do with the debt bubble. Everyone is borrowing. Everyone is borrowing. Individuals, businesses, governments. Everyone is borrowing. They are borrowing, and more they are borrowing. They are simply not looking into the debt. Okay, which is piling up $34 trillion. Anyways, so I will make a separate and a detailed video on this. Okay, I will show you the charts, the numbers, okay, from the Federal Reserve, okay, and the stock market charts, okay, to discuss this. But as of now, I think this picture is very much clear. Okay, what the correction will be, what the recession will be, the debt bubble, and what the numbers will be. But guys, anyways guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Now guys, I am going to discuss the third point of the agenda of this S&P 500 weekly technical analysis. And in this, the third point of the agenda, I will do the technical analysis on the daily chart. This is the daily chart, D as in daily chart. And the last candle is a thin bullish candle or a small bullish candle. And there is a long wick, okay, in the bull side, okay, and a small wick in the bearish side. At the time of closing, there was weakness. However, the market, the S&P 500, managed to close as bullish, as green. So this means that weakness or bearishness or the sentiments were there. Okay, but the best part is that on Thursday, the S&P 500 and the Nasdaq, not just S&P 500, the Nasdaq also, okay, it hit the saturation through stochastic RSI, and this was the same in this the final update on Thursday to my Patreon community members. And because it hit the absolute saturation, okay, S&P 500 was extremely near to, and that was sufficient. Next day, it was very much clear that it will give a sharp bullish retrace. And this was my final update to my Patreon community members yesterday on Friday. So I have mentioned that closing of the S&P 500 above 4689 means the S&P 500 has come out of the saturation created by or through the stochastic RSI, and now there is more room in the bearish side, and whenever the S&P 500 gives up, it will be coming down towards 4600 by next week. So that is why this small green candle is very important and is giving a very clear indication. Okay, this is clear. So those who ask that what is the purpose of these, the daily updates, the daily precise updates, okay, so you can see yourself. So that through these the daily updates, my members, they are aware of that what can happen or what is about to happen, what will happen if a certain condition, okay, is seen there, right? Anyways, now let's see what is happening technically here. So technically, if you notice, the closing of the S&P 500 is in between the moving averages. Okay, it will be considered as neutral, but it's still above this the Ichimoku cloud. Okay, in between these the bands of the Bollinger Bands. Okay, neutral. Other than that, the MACD is bearish. Stochastic RSI is bearish. Stochastic RSI is bearish but non-zero. Stochastic RSI is bearish but non-zero. What it means? This means that overall the S&P 500 is again 50-50, okay, or more like 60-40, okay, it is getting weaker, okay. But at the same time, because of the formation of this, the green candle, the stochastic RSI is non-zero, okay, it has created more room in the bearish side, okay. So the open on Monday and the kind of candle it is going to form on Monday, okay, and the closing on Monday will further confirm what we are going to see, whether more bullish movement, okay, or just the continuation of this the reversal, this the bearish movement. Now guys, if you also want to get these the daily updates, the daily precise updates and the precise analysis of the S&P 500, other than that, I also give the stock market opportunities in the premium stocks of the US stock market, the top 30 or 40 companies of the US stock market. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon profile and this is my Patreon page. And on my Patreon page, my Patreon profile, there are these the two levels or the two tiers. And as such, there is no difference in these two tiers. The only difference is the geographical location. So whenever you subscribe to either of these, then you will get the daily S&P 500 updates, analysis and the movement from Monday through Friday, as well as the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, if you notice that many people have joined my Patreon community for last many weeks, months, or more than a year, and they are getting these the precise updates and the precise analysis of the S&P 500 from Monday through Friday, and as well as these the stock market opportunities in the premium stocks. Whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I am going to discuss the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will discuss the probable movement of the S&P 500 in the coming week. So probable movement means what is going to happen and how it is going to happen. Okay, for from January 8th, which is Monday, through January 12th, that will be Friday. So a few things that you need to understand. Thursday, the CPI data will be published. Okay, the stock market or the Wall Street is anticipating no change in the CPI data or a little increase in the inflation. Okay, so this is what the Wall Street is anticipating, that the inflation will increase a little, okay, from this the previous one. Number two, Friday, the PPI data will be published on Friday. Okay, this means that the Thursday and Friday, these are two very important days. Okay, and if nothing happens in the market, in the entire US stock market, okay, by Thursday, then definitely a very heavy movement will be seen on Thursday and Friday. So yes, one more thing, CPI data, if the inflation, if it gives a reversal, if it goes bullish, okay, even if the headline inflation goes bullish, okay, as per the expectations of the Wall Street, okay, this means that as of now the market is not ready for this thing. And if by Wednesday, if it comes down further, okay, and if it gives up properly, and if the headline inflation goes bullish, okay, even a little, then this means that the stock market has already priced in this reversal, because it has already come down, okay, and now it can sustain or it can try to move up. So if by Wednesday, if it goes bullish, or if it remains bullish or sustains bullish, and on Thursday the CPI data shows a reversal in the bullish inflation, then a heavy fall, 3 to 4% fall within 1 to 2 days. Okay, because in that case, this means that the stock market was still speculating and did not price in this particular case, and rather it moved up from the trap and a sudden fall or a heavy decline. Okay. In case of the S&P 500, you can see this was 4698, 4698, and the closing of this candle was 4697. Okay, although looks like that there is, okay, a very minute difference, but in the stock market, okay, even a difference of just 1 cent, okay, it can make or break the market. So now this means that the S&P 500, okay, it is already weak. It has given a closing below the 4698, and it has reasons, it has technical reasons to come down. Other than that, because of the formation of this the green candle, the stochastic RSI is now not zero, it is non-zero. And in order to see this the stochastic RSI that it has become zero, okay, we need minimum two heavy red candles. If that happens, then only the stochastic RSI can become zero. Minimum 2 or 3, okay, it must be there. If there comes a red candle, then again a green candle, okay, then it will be subjective. In that case, 3 or 4 red candles are needed, because unless the stochastic RSI becomes zero, the S&P 500 doesn't have a valid technical reason to give a bullish reversal. So on Thursday it was approximately zero. In Nasdaq it was zero, and we have seen a sharp bullish reversal. Okay, so this is the magic of technicals. Okay, now the fall. the there is a problem with this, the fall or this the downward movement. The problem is not because of the S&P 500. The problem is because of the Dow Jones. Now what is the problem? The problem is that the Dow Jones may look weak, but it is not weak. It is still holding. It is still bullish. Okay, or it is more bullish as compared to the S&P 500. Other than that, if you notice, the Dow Jones is holding above the moving averages. Okay, although it has given a closing below 37,600, which itself, okay, it means very heavy weakness, but it found the support at the moving average. Okay. Other than that, the lowest of this the candle, this heavy candle, okay, it was 37,073. Okay, now this means that as of now the Dow Jones will struggle. Okay, whenever it try to move up, then it will struggle to sustain above 37,600. Okay, you can see that it has even given a breach, but again retraced, breach, again retraced. Okay, failed. So breach, okay, doesn't matter, the closing it matters. Again, so if the Dow Jones keeps on failing or struggling at 37,600, okay, but if it is still remain above the moving average, then it's not going anywhere. And also the same will be seen in the S&P 500. It won't go anywhere, just a little up down, that's it, nothing else. Okay, now when it gives up the moving average, it gives a closing below the moving average, then it will be coming down to 37,073, and the S&P 500 will be coming down to the equivalent percentage points. Okay, or for example, if the Dow Jones, let's say, okay, from here to here it is 1%. 1% means the S&P 500 can give up like 1.6 or 1.7%. If the S&P 500 gives up 1.6% or 1.7%, then it will be 1.67%. It will be somewhere around 4620. 4620. Okay, yes, if you remember that in the second point of the agenda, in this the S&P 500 weekly technical analysis, where I was discussing the correction and recession, okay, then I've shown you that through the Fibonacci retracement, the this the very first retracement level is 4626, I guess, 27 or 4626. So it makes it definitely, okay, it makes sense that through the Dow Jones, we know that if the Dow Jones will be coming down towards its previous low 37,073, at the same time the S&P 500 will come down and will hit its first this the 23.6%, and this 23.6% is 46, approximately 4,600 something, 462 something. Okay, which perfectly, okay, aligns with the downward movement in the Dow Jones. Okay, if the S&P 500 gives up this 23.6%, and also if the Dow Jones is able to breach 37,073, okay, that is the first indication. Generally we go for the closing. Okay, closing is important, breach is not. You can see that 37,600 breached but closed. Okay, but for those who are not aware of this, the closing and all, you can simply consider the breach. If there comes a breach of 37,073 and the Dow Jones comes down further, in that case the S&P 500 will be coming towards the 38.2% of the Fibonacci retracement level. Not immediately, it might take 2, 3, 4 days, okay, 5 days, it depends, okay, on the movement. It will be coming down to 38.2%. and what is the 38.2%? It is the golden support level at 452737. Okay, that is a strong, very strong support zone, but not the level support zone. Okay, and the S&P 500 will try its level best to not to breach this the very strong support zone, and also at the same time the S&P 500 will try its level best to not to breach or not to give up. It can breach, but it will try to give a closing at or above this the 23.6% Fibonacci retracement level. Okay, anyways, in simple words, it all depends that what is happening in the Dow Jones. If the Dow Jones has breached 37,073 or not. As simple as that. Let's keep it very, very simple. Okay. Any fall in the Dow Jones, okay, you can simply replicate the same in the S&P 500. So next week up to 452737. Okay, that's it. Yes, now comes the bullish part. Bullish part, here again we will take the reference to this, the Dow Jones. Okay, so if you look into this, the bullish part of the Dow Jones. Okay, wait, there is one more thing. The stochastic RSI in case of the Dow Jones is still not zero. It is not zero. You can see the stochastic RSI. Okay, it has come down significantly, but it is not zero. MACD is bearish, stochastic RSI is bearish. In the case of S&P 500, the same condition. And in my previous S&P 500 weekly technical analysis, okay, I have cleared the concept of this. Because the MACD is bearish, stochastic RSI is bearish in both of the indices. This means that there is and there will be heavy bearish pressure. Now, a technical reversal can come only if the Dow Jones gives one or maybe two, okay, red candles. So if you are my Patreon community member, okay, then we will see that what is happening on Monday. If there comes a red candle, then it may or may not allow the Dow Jones to hit the absolute zero. Okay, so I will check and I will let you know. If it hits zero on Monday, in that case definitely on Tuesday we can anticipate a good reversal. But if it hits on Tuesday, in that case we can anticipate a reversal, good bullish reversal only on Wednesday. Okay, it depends that when exactly it is going to become this okay, or hit this the saturation. Okay, so this is the case. MACD stochastic RSI, MACD stochastic RSI. Bearish pressure is there in the entire US stock market. Now, if somehow the Dow Jones is able to move up on Monday and is able to give a closing above 37,600, this means that at the same time the S&P 500 will struggle around these the moving averages. If you look into these the moving averages, okay, on Friday the S&P 500, and before that on Wednesday also it failed at the moving averages. Okay, so if the S&P 500 again fails at the moving averages, but the Dow Jones is able to give a closing above 37,600, this means that no more hit or no more saturation. Okay, but on Tuesday we can anticipate that the S&P 500 will be able to move up further. Okay, and so will be the Dow Jones, right? Now the S&P 500 can move up only and only if, or only and only when it is able to clear the moving averages, clearly sustain and clear closing above the moving averages, and then immediately after that we have a very strong resistance zone, very strong resistance zone. Because the S&P 500 failed to sustain, failed to give a closing in last 4 days above the strong zone, or you can see that on Tuesday also, okay, it failed to give a closing. This, okay, that is why, okay, it was coming down. Okay, it has retested, but again it was coming down. Okay, so that is why just after these are moving averages, we have a very strong resistance zone. If the S&P 500 is able to clear the moving averages, then we have to see whether the S&P 500 is able to sustain at this a very strong resistance zone or not. Only and only if the S&P 500 is able to sustain above the resistance zone, it will be able to move up further, and then the 4818, the previous all-time high, okay, it will be back into the picture. Okay, whatever bullish bearish movement we are going to see, it will be only up only until Wednesday end of the day, because the next bullish or bearish movement will come or will be seen only on Thursday based on the CPI data. Okay, then the CPI data will take over everything, the technicals, manipulation, everything. And if the CPI data will be better than expected, in that case a heavy or the sharp fall. If it is in line with the expectations, or if the inflation further declines, in that case, okay, further bullish movement. Okay, so this is how the bullish and bearish are subjective. But let's not speculate what the CPI data will be, what they will do, what they will not do. Let's just stick to the technicals and the levels and the zones, and the picture will be very much clear. So recently we have seen that last time also it gave up okay, this through this particular candle, it gave up the zone. But the next day and in that the 2 days, okay, it managed to recover the zone. Okay, that is why it was able to move up. But now it has given up and there are 4 closings below the zone. Okay, this means that we need two consecutive, two successive closings above the zone, so that the S&P 500 can sustain and can move up further, right? So that is the only condition for the bullish movement. Before the zone, we have the moving averages. It must give a proper closing above the moving averages. Okay. Now there is one more very interesting thing. Very interesting thing. Okay. And this is through these the moving averages. If you notice, then it's been yes, first week of November we have seen a crossover in the moving averages in the first week of November. Since then, clear fan out, bullish trend. Okay. Now, this will be the very first time when we are about to see a crossover in the moving averages. Okay. Generally, whenever this kind of situation is seen, then the market, particularly in the bull side, particularly in the bullish side, that the moving averages are about to give a crossover. And if this crossover happens, in that case, this will mark the journey. Okay. Or not just the journey, that we will say that the reversal will be there, and also a potential change of trend in the coming days from the bullish to bearish, and then there will be, fall and heavy fall. Okay. So generally, because now there is still, no crossover, so what they can do is that they can try to give a bullish movement on Monday and on Tuesday, so that this crossover can be avoided. If the crossover will be avoided, if there comes a bullish candle on Monday, then there will not be any crossover, rather it will form a slip. What does the slip do? Slip means that whatever was a trend, it will continue. Trend was bullish, it will continue. Okay, that is the meaning of the slip. Okay. So this means that Monday will be very decisive. Monday we will come to know that means what is expected to happen at least until Wednesday or in the coming days. So a crossover on Monday, a bearish candle means a lot of things. If there comes a heavy bullish candle, if the crossover is avoided, okay, and this thing, then this means that at least until Wednesday the market can sustain, not a problem. Okay, a lot of these things. In the bull side, we know 4818 maximum for now, it will remain in the picture. Okay, but before that, a very strong resistance zone. We need minimum two successive closings above the resistance zone, and before that the moving averages. In the bearish side, we know that the market will be able to give up, S&P 500 will be able to give up only to the level which is equivalent to 37,073 in case of the Dow Jones. Only if the Dow Jones gives up this level, the S&P 500 and the Nasdaq will further give up. Okay, so that picture is more clear in that part. 1.6%, 1.67%, 23.6% of the Fibonacci retracement level. Okay, approximately 462 something is there. Okay, or 4,600. Okay, in simple words. Okay, it will be there. So whatever will be these, the resistance zone, the levels, okay, on the daily changes, okay, the saturation or not, I will keep you posted through these daily precise updates and analysis. And if you have not yet joined my Patreon community, then you can join my Patreon community for the daily analysis, the daily updates of the S&P 500. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to participate in any of my programs, this is the stock market knowledge transfer program to become self-reliant, or the 30% returns in 1 year, then I've given the link to these programs in the description of the video and also in the comment section. So guys, hit like if you have liked this video, and subscribe if you have not yet subscribed to my YouTube channel. So guys, this was my S&P 500 weekly technical analysis for the coming week, that is from January 8th, which is Monday, through January 12th, that will be Friday.